Welcome everyone. We are here in beautiful Mauritius. I'm at the beach. You can kind of take a look and see. And today we are going to talk a little bit about the gold investment thesis. So I am making this video on the 31st of March, 2025. And we're going to talk about what is the thesis for buying, holding gold, how much of it, kind of where are we at, etc. And, kind of just how I'm thinking about it at this stage in time. Hopefully I'm trying to kind of show you guys the beautiful beach of Mauritius, which by the way, you should definitely come and visit. I am here on an excursion with my wife, and it is it's quite a beautiful place. I would say not quite at the caliber of Seychelles and Maldives, if you were to kind of look at it from the perspective of quality of beaches, quality of water, etc. But the water is nice and warm. The beach is still good, and there's like much more going on. Mauritius is a bigger island. Anyway, so let's get into this thing about gold. Okay, so here's kind of the basic idea as I'm thinking about gold, and I'd love to hear from you guys. Put it in the comments below. Tell me your thoughts, and if you're interested in lots of discussions about this sort of thing, come and see about joining investor.net for co-investing opportunities and sharing deal flow. By the way, if you guys have deal flow, then please submit it to us through investor.net. We're interested in looking for all kinds of hard money loans and private real estate deals and all this sort of thing. By the way, Mauritius, not an amazing place for real estate investing from what I can tell. So gold has obviously gone up a lot over the last while. Last year was a great year to buy gold. And one can sort of ask what's been going on with gold. Now, my thesis on what has been going on with gold has a lot to do with the changes resulting from the sanctions on Russia based on the war in Ukraine. So you can kind of think about who is buying it and who are the parties who benefit from holding it versus some other asset. Now, my thesis would be historically a big part of what kind of sovereign nations, etc., would like to hold government bonds, right? So we're talking about bonds, in US government bonds, Euro bonds, then obviously kind of some distribution after that. Unfortunately, what happened? Well, the US and Europe showed that they were not very safe places to keep your money if you're a sovereign nation, because they may get frozen and potentially confiscated to the tune of hundreds of billions of dollars. And so I think pretty much every major government saw that and kind of took note. Now, they're probably still going to hold some US government treasuries. You're probably going to see the same with Euro treasuries. It's probably not entirely going away. But increasingly, they're looking for something that is neutral that they can hold. And the answer to that is gold. It's the third largest reserve currency in the world after dollars and euros, higher than yen, higher than GBP, higher than Swiss francs, higher than Canadian dollars, Australian dollars, etc. And as we said, totally neutral. Like if you hold physical gold reserves, that's that. I don't think that they're going to be saying, oh, hey, well, let's go and hold, I don't know, Chinese yuan at this point in time. That doesn't seem a lot safer. They're not going to hold Russian rubles. They're not going to hold, a bunch of this stuff. What are they going to hold? They're going to hold gold. And, ooh, it's pretty windy. Sorry about that. Let's just quickly kind of be here out at the beach. You can see, very beautiful. Yeah, really nice. We'll go swimming later. Anyway, I think if you look, that was sort of a turning point. You've had gold tends to go through these periods of outperformance and underperformance, pretty long cycles. Like if you think from about so the early 80s to the early 2000s, basically, or around 2000, it was in basically a downtrend, following a huge uptrend in the 70s, right? It had this like really rapid move. Then it went up a lot, early 2000s, peaking in whatever it was, 2011 or something like that. And then basically went down for a lot of years and seemingly bottomed and has now gone up and hit new highs and has now crossed over $3,000. Technically speaking, in my opinion, this is, I'm curious to hear you guys' thoughts. It's gone up a lot. I don't like things that have gone up a lot. It could easily have some sort of a pullback. There have been some pretty smart people, such as the Bond King from Double Line Capital, very sharp dude, who has mentioned that, you could see gold at $4,000. I don't think that's like a totally insane idea. That's a 33% move up. If you look at kind of the degree to which it has gotten overvalued before pullbacks historically, this would not be out of the question. I think you're probably going to continue seeing foreign governments buying gold. I don't think that's going away. And so it just doesn't seem exceptionally likely to me to see an end to this like general uptrend. Personally, I think that a lot of people would like to buy on a pullback. It's unlikely to pull back as far as they would like it to go in order to be able to have this buying opportunity, just because of exactly that reason, right? You're in a situation where you say, well, I would buy if it was meaningfully lower. Okay, great. Well, there's a lot of people saying that, so it'll just never get there. This being said, I do think like risk to reward, it's sort of mediocre at this point, unless it has a pullback. So I think, you know, for me, I look at it and I say, well, maybe buying whatever. You can kind of ask, is it a 5% position, is it a 10% position, etc. But some sort of position like that at a point in time when it is on a pullback. So, you know, however, whatever that looks like, you can kind of do your own analysis and figure out, is probably like reasonable risk reward, especially given the state of the kind of overall financial system right now. There's kind of a lot of risk in US equities, equities in general. There's lots of talk of recession, of, you know, what will the effect of the different US administration policies with between tariffs and cutting spending, and, you know, does that get accompanied by increases in taxes, or sorry, decreases in taxes elsewhere? How does that work in terms of flow of capital, et cetera, et cetera, et cetera? Unclear, right? Unclear. And so people are opting to go into a position that has a fair amount of certainty relative to, you know, kind of the more risk-on type stuff that they've been in. And one of those things happens to be gold. You know, there's not that many places you can go. It just seems pretty decent in this regard. I think you can ask, will there be more money? Probably yes. Will there be more flows as a result into gold? Probably yes. What about the strength? So gold is priced in US dollars. What is the thesis on where the US dollar will be? My thesis is the US dollar has probably peaked. We've probably seen this like long run, and now, for a variety of reasons, one of them being the Trump administration will want to push for a trade policy where the US can export. They will want a weaker dollar. That's one of the reasons why I think this will happen. Another reason I think that you will see this happen is because of the fact that it is likely, when we see kind of more austerity type measures in the US tend to weaken and drive for lower interest rates. At the same time, in Europe, what we see is that they seem to want to spend more. You see big spending bills, etc., coming out of Germany. They want to finance their own defense, etc., etc. This is likely to be inflationary. Now, let's be clear, that's inflationary, yes, for financial assets, but also just like for expenses in general, because you're kind of sucking supply out in a way that is going to be functional. So what does that mean? That means probably you see higher interest rates in Europe versus the US. Since about 2012-ish, is that US interest rates were higher than European interest rates. And we saw USD clobber the euro for that entire time, like a decade and a half practically. Now you're seeing the opposite, right? Now you're seeing a reversal of those fortunes. That's probably bearish USD, bullish euro, because of the fact that higher interest rates in Europe, lower interest rates in the US. You probably are going to see gold do well on a dollar denominated basis, right? Let's keep in mind, and this is like a really important thing. I remember a number of years back sometime around 2009, somebody kind of gave me this comment, and it was interesting. It was like eye-opening. I didn't have a global investing mindset at the time, didn't understand kind of doing things at a larger scale with larger amounts of money, etc. But one of those things was, they said, oh, gold went down yesterday. And somebody was like, what are you talking about? No, gold went up yesterday. They said, no, the US dollar went down, and in dollar terms, it went up. But because of the fact that the dollar dropped more than the gold went up, gold actually went down. And so you have kind of a similar situation in reverse here. I think because of the fact that gold is priced in dollar terms, I think dollar is going to be weak, gold relatively strong, capital's flowing kind of gradually more and more into gold. This creates some degree of reflexivity. We're probably at a point right now where, you know, it's gone up a lot, and so, you know, you have a bit of a breather and reallocation and all this sort of thing. That's probably all true. And probably in the big picture, it doesn't matter. You're probably having gold up for some degree further, you know, whether that's 4,000 or whatever number you want to pick, compared to a bunch of other things, it's probably decent. Now, do I think it's like amazing? Do I think that gold will outperform Bitcoin over 10 years? No, absolutely not. I think Bitcoin will outperform gold over over 10 years or 20 years or whatever. I, hold much larger, actually I don't hold any gold positions right now. So I should probably go, I've been investigating how best to buy gold. One of the ways is, of course, just buying gold, right? You can do that. The other way is to buy royalties companies, which have outperformed gold over the last quite a while. It's turned out to be pretty good. And the third option is to buy miners. Now, miners mostly have underperformed gold really badly. They've not been good at all. However, they are, in a lot of regards, it depends on the miner and things like this, looking very cheap. And they haven't had a run, which they often do when gold does well. And so I've been investigating which miners benefit the most from prices of gold going up, and possibly placing some of the gold bets there as opposed to just purely in gold. So it's, I think, worth looking at. We'll discuss it lots in the the investor.net community, talking about some of these royalties things, royalties plays, gold itself, as well as gold miners, to see is there something that makes sense there. But I think that for a person to take a 5% allocation or something in gold or gold related assets just seems really, really sensible to me at this point in time. Tell me what you guys think. Put it in the comments below. Like I said, if you have ideas for investing, we would like to hear them. If you'd like to join, investor.net is kind of a global co-investing community looking for high quality investments to beat the market, alternatives, etc. As well as, especially if we're in a situation where we can get deal flow, we help each other kind of bring in deal flow. And so if you have deals, by all means, if you'd like to kind of have us look at them, please send them in. And I will look forward to seeing you on the next video.